Hello everyone, it's me Bima Farooq. Welcome to Law of Money. Today we are going to learn about fundamental analysis. So let's start. Slide 1, Introduction to Fundamental Analysis. Before you even think about looking at a stock price ticker that flashes red and green like a confused Christmas tree, you need to realize that you are not playing the market. You are auditioning to become a part owner of a multi-million dollar business. Fundamental analysis is the art of looking past the hype to see if the company is sturdy fortress or just three raccoons in a trench coat pretending to be a corporation. Your goal is to find the intrinsic value, which is the real world price tag of the business, regardless of what the noisy stock market thinks today. Treat every stock purchase like you are buying the local grocery store. If you won't trust the owner with your spare keys, don't trust them with your life savings. Slide 2, the Analysis Toolkit. Now throw away the ideas that you need PhD in rocket science or a supercomputer to do this. Your primary toolkit consists of three things: a genuine interest in how the world works, the ability to focus on data you actually understand, and the maxil of a fifth grader. If you can add, subtract, and realize that spending more than you earn is a bad thing, you are already ahead of half the people on Wall Street. Stay within your circle of competence. If you don't understand how a company makes profit from selling digital goods, don't buy it. It's just because it sounds futuristic. It must safer to analyze a company that sells biscuits if you actually eat the biscuits. Slide 3, Locating raw data. Finding the truth requires you to go straight to the source, and that means the annual report. This is basically the company's wrong rumbling diary where they try to look good while legally being forced to tell the truth. You can find this on search engines, the investors relation tabs of any corporate website, or the BSE and NSE portals. Here is a massive red flag. If the annual report is over 1000 pages, their management is either extremely true or more like they are trying to bury their mistakes in a heap of mountains of borrowing text. Use the search function Ctrl plus F to look for words like litigation, contingent liability, or debt. If those words appear often more than word profit, you might want to close the tab and go for a walk. Slide 4, Understanding the business. To truly understand a business, you have to look at it from two angles: the news and the reality. External sources like trade journals, industry news, and a printing association report tell you if the entire neighborhood is doing well. But the internal code report tell you if the specific house is on fire. You need to identify their business vertical, which is just a fancy way of asking which products actually brings in the cash and which one are just expensive hobbies for the CEO. If a company makes 90% of its money from one product and that product just got banned in three countries, you don't need a calculator to know that's a problem. Slide 5, Quantitative Analysis. Now we move into the numbers room. For some quantitative heavy lifting, you need to look at the least 5 or 10 years of history. Looking at such just 1 year of data is like judging a marathon runner based on the first 10 feet. You are scanning the balance sheet. What they own was what they owe. The P&L, the score of the game, and the cash flow, the actual physical money in the bank. Pay close attention to net profit margin. If they are shrinking while revenue is growing, the company is working harder but getting poorer. Debt is like back pay full of bricks. A little bit is fine for exercise, but it is too heavy. The company will actually collapse under the weight when the company gets uphill. Slide 6, Evaluating Management. The number tell you what happened, but the management tells you what will happen. This is where you perform a legal background check on the people in charge. Look at the CEO's pedigree, not their family tree, but their track record and education. Are they experienced industry veteran or just someone's nephew? Check their immersion. If the management is taking a massive salary increase while the shareholders are losing money. They aren't leaders, they are pirates. The ethics are not an extra, they are the function. A brilliant CEO who lacks integrity will eventually find a way to lose your money, usually while smiling for a magazine cover. Slide 6, Modes and Governors. Beyond the people, look for more. This is term popularized by Warren Buffett that refers to a company's competitive advantage. Does the company have a monopoly, a world famous brand, or a secret recipe that nobody can copy? If anyone with a laptop and a dream can start a competing business tomorrow and steal their customers, the company has no moat. Also keep an eye on related party transaction. If the company is buying its raw material from factory owned by the chairman's wife at double the market price, they are honing your investment out back door. High corporate governance isn't just about being nice, it's about making sure the money stays where it belongs. Slide 8, the ultimate goal, intrinsic value. Finally, we arrive at the holy grail, management business valuation, MBV, and intrinsic value. This is where you combine the vibes of the management, the strength of the business model, and the hard truth of the numbers to decide what the company is actually worth. If you are calculating intrinsic value in $100 but the market is selling it for $60, because everyone is panicked about a headline, you found a bargain. If the market is selling it for $200 because of hype, you stay away. Remember, the market is a voting machine in the short term but a weighing machine in the long term. If you know the value, you don't have to worry about the price. Going through financial reports one by one is honestly exhausting. It can take weeks just to properly read and understand and compare everything. Most people either give up halfway or miss important insight because of how time consuming it is. That's actually why I am hosting a live section next week, Saturday at 6:30 p.m., where I will show you how to analyze reports faster and smarter using AI so you can save time and make better decisions without feeling overwhelmed.